Oracle just reported 14% revenue increase, cloud growth ripping higher, and earnings way above expectations, yet the stock tanked. So, what is going on here? And is this actually a buy the dip setup or a red flag masked as a bid? Let's break down Oracle's latest earnings right here on WealthTown with me, Norbert Menhart, where we build and protect wealth. Like and subscribe. And let's get started with a company snapshot. So Oracle is one of the world's largest enterprise software and cloud service companies. Its business spans from databases, applications, and cloud infrastructure, and innovators watch its shift to a cloud plus AI core growth story. So we always need a growth story in order to invest in a stock. Heading into its report, the stock had a bit of volatility as markets questioned how fast Oracle can compete with AWS, Azure, and Google Cloud. So let's take a look at their earnings highlights, because total revenue was $16.1 billion, up 14% year to year. The cloud revenue, and that is IaaS plus SaaS, which is SaaS, software as a service, $8 billion, up 34% year to year. GAAP diluted EPS $2.1 per share, up 91% year to year, so wrapping 91%. But this was kind of boosted by a one-time gain. Thereby, they actually sold something off. Now, also their non-GAAP EPS $2.26 per share, which is up 54% year to year. Now, their remaining performance obligations, short RPO, remaining performance obligations, so what kind of backlogs they have, companies already have orders with, and that is up 523 billion, which is up 438%, giving revenue visibility for far into the future. Now, their segment detail is as following: cloud infrastructure up 68% and cloud applications up 11%. So RPO signals us a strong growth, and with their massive backlog, they're signaling actually a strong growth. So a key metric for subscription and cloud business. So what did the stock do? Well, the stock just tanked 11% after reported the earnings. Something has had to happen, because fundamentally the stock looked good, but because of revenue barely beating cloud growth while strong, missed some expectations, and Oracle announced a much higher spending and data center and AI infrastructure. It did raise some concerns about their margin and depth. So I would have loved for them to actually address this and somehow make the investors feel more comfortable with, but they did not. So what did management actually say here? The Oracle's CFO highlighted that the 523 billion RPO figure is a huge backlog from companies like Meta and NVDA, and also others. Now, the CEO on the left side, Clay McGuire, and the CTO, which is also the owner of Oracle, Larry Ellison, emphasized that high chip, and is a quote, a chip neutral strategy. So what does it mean? That a automation focused in cloud data centers, meaning Oracle will support CPU and GPU that the customers want, and will scale cloud services with heavy automation. So let's just translate it. This kind of means that we're building for scale and AI demand, but that often means front loading and spending for revenue later. So that's kind of exciting for long term, but as you can see, not everyone was that excited. So let's just do a trader's take here on the stock, and let's jump to a technical chart here. So the green area is actually a support range for far back to 2024. So prior highs become now support. Actually, it bounced from them, went higher into earnings, and from earnings came down to, as you can see here in the pre-market, 198 right now. So let's just talk about the fundamentals once again. Solid revenue growth, but slightly below some analyst expectations, what they actually forecasted. Cloud segment growing rapidly, but expenses are rising too. They're massive RPOs, they do have massive backlogs, which is a positive forward-looking metric. These are the fundamentals. On the technical side, they just hit support once again. So I'm kind of curious because this was after the market closed and this is a sell-off afterwards. When the market opens, which will mean that the RSI will be once more, they're currently, before the bell, they set at 48 RSI. Now, after the bell, they will after today's open, they will probably be oversold once more, so under 30, which I would almost say that for the long term. Now, this is not going to happen next couple of days, but maybe for the long term, it's actually bullish. This is actually a good buying opportunity. I would wait. Let's just see. Wait for a reset of support. Wait for volume rebound here before adding something, and a breakout above resistance. So it currently now has all moving averages as resistance above its head. And if it keeps that, so it goes up, comes down once again, retests that zone, and went we kind of need, let's do a daily chart, let's go to the weekly chart. On the weeklies, it was trying to get from long term, it was having a sell-off from the 22nd of September till now. It was constantly selling off on the weekly candles, and then it bounced back 2 weeks, 2 weeks of green candles, and now today we're going to have a red candle. But who knows if this keeps up. As I said, this is beautiful support here. If this support between the 200, let's just say, and this prior support 150, 160, if this gets not taken out, then Oracle is good to go for the next leg up higher. So all your retail investors, short-term, neutral, or slightly bullish. Oracle beat on earnings and has strong cloud growth, but a sell-off shows investors are wary of spending and near-term execution. But long-term, I would say this is completely bullish, but conditionally. We need to see some returns. We need to see those massive RPOs and cloud momentum give Oracle a runway. If cloud monetization and margin improves, this could be a core tech AI cloud holding. Now, some key catalysts that you should watch for. First of all, next earnings cycle. Does cloud revenue actually accelerate? Guidance for 2026. Is it consecutive or optimistic? And the infrastructure spending impact on the margin, because they're going to spend a lot, meaning this is going to influence their margin. Okay, so hope you enjoyed this video. Next up, I'm going to create a stock analysis, earnings analysis on Adobe. Definitely don't miss that one. Also, don't miss my daily before the bell editions, where we talk about markets and trade setups. Hope you enjoyed this video. Give it a thumbs up if you did. Subscribe to the channel, because I do this kind of reviews each time something important comes out. This being said, I'm Norbert Menhart. I build and protect wealth. Stay safe out there. Bye-bye.